Hello and welcome to this session in which we would look at audit documentation. This is Professor Farhat, and the first thing I want you to think about when you think of audit documentation, think about Arthur Andersen, the former audit firm. Arthur Andersen used to be one of the big five. What happened to Arthur Andersen? Now they're gone. And if you follow what happened to Arthur Andersen, the first thing that they did when they knew they were going to be investigated, they started to shred documentation. They started to shred the audit documentation. Why? Because they wanted to hide the evidence. Because the audit documentation should stand on their own. They should tell you exactly what happened. So the audit documentation is the record of the audit procedures performed. And obviously, if you are not proud of your audit procedures, what are you going to do with it? You're going to hide it. How are you going to hide it? Like in Arthur Andersen, they were shredding all the paperwork. Okay? So basically, it's the record of the audit procedures performed, relevant audit evidence, the evidence that you collected, you have to keep to show later on if you are sued, or it doesn't have to be if you are sued. Let's assume someone left. We have, employee turnover is pretty common. So if somebody else came to take over the audit, they know what happened, so they can follow up. So that's why you have to have a proper documentation as well, not only lawsuit, also for internal purposes. And the documentation should support your conclusion. How did you came up with that conclusion? Once again, if you're not proud of that, you will destroy the evidence. But once you destroy the evidence, you're pretty much guilty. So, purpose of the audit documentation, what's the purpose? Basis for planning the audit. When you plan the audit, you have to collect information about the company. You have to show what information that you collected when you looked at the company. It could be the budget, it could be it could be just public information, it could be, as we talked about in the prior session, it could be the analytics. So how did you plan for this audit? Okay. Also, when you are performing the audit, you have record of the evidence accumulated and the results of the test. As you are performing the audit, how did you perform the audit? What steps did you take? Who did what? When? What did they find out? You have to show that. You have to show evidence of that. Data for determining the proper type of audit report. At the end of the day, you issued an audit report. Most probably it's unqualified. What evidence did you use to support your decision? Because that's important, because that's basically your final work. And obviously, basis for review by supervisors and partners. When the supervisors or partner review the audit, they have to show that they indeed review it. When, how, you have to have an evidence of that, okay? Because that's a required step in the audit, so someone reviewing it. So you have to understand that ownership of the audit files are the property of the auditor. So the auditor do own the paperwork, okay? Now, we have to keep in mind the AICPA confidentiality rule, which is the confidentiality here of the audit files, okay? So the Code of Professional Conduct states that member in public practice shall not disclose any confidential client information without the specific consent of the client, or if we have a legal proceeding. Now, we can share that information internally for reviews, but we cannot share it with an outsider without the consent of the client or without a legal requirement, for example, by court. Then there's no confidentiality. If the court says, if it's a subpoena, you have to show it. Okay. The company will have to have a retention policy of audit documentation. Auditing standard require record of private companies to be retained for a minimum of 5 years. So if it's for private companies, you have to have the record for 5 years. Sarbanes-Oxley, which is publicly traded companies, you have to maintain the record for 7 years. So always remember, when the AICPA or someone from the PCAOB comes to you, if they want to review your paperwork, the audit documentation should stand on their own. They should tell the whole story from A to Z. How you planned for the audit, how did you perform the audit, how did you came up with your conclusion, and who did the review. Okay. And we're going to look at a few illustrations, but you have to understand the difference between something called permanent files, and we have something called, if we have permanent and we have current files, but we're going to look at the permanent file first. So basically, the audit documentation will be broken down mainly by the permanent file and the current file. Okay, the permanent file contains data of historical or continuing nature. These provide the convenience of information that's used from year to year. So there's certain information that stays with us from year to year that does not change. We keep those in what we call the permanent files. What could be examples of the permanent file? Now, if you are studying for your CPA exam, those are some of the questions that you might be asked. What goes into the permanent file? What goes into the current file? So make sure you know this. Copies of the company documents such as articles of incorporation, bylaws, bond indenture, bond agreement, long-term contract. They're going to be the long-term contract before 4 or 5 years. So those will be in the permanent file. Bond agreement, bylaws of the company. They're not going to change. They're going to be with you permanently. That's why it's called permanent file. Analysis of accounts from previous years that have a continuing importance. So you may look at you may have few accounts that are important. You're going to keep their analysis, their changes. Okay. Information relating to understanding internal control and assessing control risk. This is important. If there's any comments about internal control, any weaknesses, any suggestions about the internal control, that will be in the permanent file. This way, when you are reviewing the following year, you could just say, here's what we told them last year. Let's see if they did it. How is that control is working now? Okay. Results of analytical procedures from prior year's audit for comparison. And you'll have analytical procedures. Why? Because when you start the following year, you will need that information to compare to the prior year. So that will be in the permanent file. That will be in the permanent file. We'll come back to this page. Now let's look at the current file. What's in the current file? Things that you don't keep from year to year. Things that are specific to that year. Okay. Include all documentation for the current year, including the audit program. Obviously, you have to have an audit program every year. Working trial balance. Obviously, you need a working trial balance for every year, right? Because this year is different than last year. Each line is in the trial balance is supported by a lead schedule. So every number in the trial balance, there should be a lead schedule. How did you come up with this figure? And we'll look at a lead schedule. Let's look at a lead schedule. A typical lead schedule for cash is included in figure 7-4. So basically, what you have to show, the cash, okay, it started, the preliminary was 212 million. You adjusted it by 90 million. The final number is 122. Now you have to have a lead schedule. Now, where did you come up with all this cash information? This is the lead schedule. Okay, and you have to show, for example, this was the cash on hand. Look at A2. Paperwork A2, cash in the bank. Look at paperwork A3. Usually cash has, A1, A2, A3. Payroll A4. Look at A4. To go to A4, you can go look at the bank reconciliation. A3 also, you'll have a bank reconciliation for this account. A2, you'll have a cash count sheet. This is cash on hand. Now the bank reconciliation is going to have outstanding checks and confirmation supporting the numbers. So you have to show. For example, this is all to support cash. So the lead schedule would list all where the various number came from. Then within the lead schedule, everything that you have on the lead schedule has to be supported by some paperwork. And believe it or not, you might have a stack of papers just depending on how many different bank accounts they have. You could have a thick file just for cash. Let's assume they have 10 different bank accounts. You need 10 different bank reconciliation. They might have payroll. You may need to reconcile payroll. But the point is, every account has to be supported by something called a lead schedule. And the lead schedule, once again, goes into the current files. Also, adjusting entries. Auditors propose adjusting entries for material misstatement and adjusting entry to cash illustrated in 7-4. So every time you make an adjusting entry, those will be supported separately. Adjusting entries. Notice here the adjusting entry, they debited an expense and they credited cash. And I guess it's an adjustment. They went here to in paperwork A-3. Okay, that's also included in the current file. And all supporting schedule, any major type of analysis, trial balance or list, reconciliation amounts, substantive analytical procedures. Those are the things that you repeat every year. Summary of procedures, examination of support and documentation, informational outside documentation, anything else that's relevant to that specific year. And this is proper documentation. We'll come back to this. This is, for example, for what? What account is this? This is the proper documentation for notes receivable. So this is how you would properly document what you did to note receivable, which we'll look at it in a moment, okay? So audit documentation, this is an example of it. This is for notes receivable. We'll come back and we'll review this. Should be in sufficient detail to provide a clear understanding of the work performed, evidence obtained, and conclusion reached. So when you have audit documentation, it has this, again, the key is to stand on its own, because if someone coming from the PCAOB to audit you, they don't want to be asking questions about the paperwork. If it's confusing, it's not clear, then you did not do the proper job. Maybe it gets misinterpreted. So it has to be clear. It has to stand on its own. This is the key. The paperwork has to stand on its own. Documentation should have the following characteristic: identified with the client name, period cover, description of the content, initial of the preparer, date of the preparation, and index code. So let's take a look at this. Once again, you have to have let's look at what we have here. You have to obviously have the client name, Ronaldo Machines, what area are you auditing, what year, the schedule is C1, receivable is usually C1, preparer, JB, this is who prepared it, and the date prepared 12/23/2016. So this is basically some of the things you have to have, okay, as proper documentation of the audit work. Again, once you work in the field, you will see, you'll be very familiar with that paperwork, but you need to know how it works. File should be indexed and cross-referenced to aid in the organization, obviously. So you have to show, for example, here, we'll come back to this. Documentation should clearly indicate the audit work performed through memo, initiating the procedure in the audit program, or tick marks on the schedule. We'll look at those. Include sufficient information to fulfill the audit objective, and conclusion reach about the segment of the audit should be clearly stated. So notice here, I'm going to go over what we just said. Those are called tick marks, and each tick mark will tell you what it means. For example, the X here, agreed face amount, interest rate, issued and maturity date to notes receivable document. So here what they're telling you is they agreed this information to the note receivable documentation. So they did look at the note receivable documentation. They're telling you this, okay? So they're telling you that they agreed all of this. P, positive confirmation received, no exception noted, face amount, issued and maturity date, and interest rate and accrued. See work paper. This is referencing work paper C-2. What they're saying is, for all these notes receivable from those various clients, Lopez, Eastman, Toledo, Manor, commercial, copper, what they did is they did receive positive confirmation confirming those figures, and plus they did the proper accrued interest calculation. You could look at WP work paper C-2. This is schedule C-1. If you look at C-2, they're going to show you all the details, calculation, and maybe also the confirmation, okay? This at mark, recalculated accrued interest, no exception noted, so they recalculated. Notice the step is they recalculated. Here what they said is they footed, which is they totaled this number. They totaled this number too, they footed it, they totaled it, and traced and agreed to trial balance. And what they did, this number that you see here, the face amount is, if you look at the trial balance, it should agree, they agree it, they made sure it's the same, and the accrued interest, it's the same. Now, most of the time, the paperwork is connected to the trial balance in some situation, depending on how much your paperwork is electronic. So notice, everything that you do, you have to show what you did it, how you did it, how you came up with every figure. Did you confirm every figure? So everything that you see here, they're telling you that they checked it against the paperwork, they received confirmation, they recomputed everything, they total everything, and everything matches the trial balance. So this is proper paperwork, okay? And this is explanation of audit procedures, what we did, and this is you have to have a conclusion. Let's look at the conclusion. Notes receivable at 11/30/11/16 appear fairly stated. The collectability of all notes was discussed with the controller. So they're saying is they discuss the collectability. They think everything will be collected per our conversation. All appear to be collectible. In my opinion, no loss provision is necessary. So what they're saying is we don't need to have an allowance for the notes receivable. Obviously, they discussed this with the controller, but they also have a reason to believe that's not only discussion. Maybe in the prior 2-3 years, they never had any incollectible, so they believe nothing will be incollectible. And notice that individual JB initialed the paperwork, and this is the proper Audit documentation. Once again, once you're in the field, you're going to be very familiar with this type of paperwork. A for cash, B for receivable, C for notes receivable, D, E, so on and so forth. You're going to have a thick file, and this is what the complete file looks like. The financial statement and audit report, work paper trial balance, the audit program, so on and so forth. Test of details, you list the assets first, then liabilities. Then if you have any contingent liabilities, then you have your permanent file. Again, this is just audit file. Depending on how your company does things, it may be a little bit different, but you will see this paperwork again in the real world. Okay. If you have any questions, any comments, by all means email me or see me in class. But remember, audit documentation are important. You need to know what is in the permanent file, what's in the current file. Be familiar with tick marks and what are the major things that goes on audit documentation. If you have any questions, any comments, by all means email me.